It's just that there's some surprises slipping in there, like Bitcoin that didn't even exist in the ETF market a couple of years ago is in the number 9 slot.
Right. Well, okay, so short answer is everything's going to be successful because people will buy anything. Hey folks, welcome to the ETF Zoo here at ETF.com. My name is Dave Nadig. I'm joined by Sumit Roy, also here at ETF.com. Say hi, Sumit.
Hey, Dave.
Elisabeth Kashner at FactSet. Hello, Elisabeth.
Hello, Dave.
And Todd Sohn at Strategas. Did I say that right? Strategas. What do we say?
You know, we always say it doesn't matter what you call us as long as you call us. But the proper, which listen, it gets messed up all the time, is Strategas. But it's great to be with you either way.
Well, anyway, I'll get that wrong at least 4 or 5 more times. The point of this show is to go through the absolute insanity that is the ETF market, covering everything that's happened in the last couple of weeks that you might want to know about. I'm going to start off with Elisabeth. What are we looking at in terms of mid-year trends here? You cover this on a regular basis, looking at flows, looking at assets, looking at expense ratios. We've had some big shifts this year. I'll go ahead and try to toss one of your charts up, but lead us in. What's the real story so far this year in terms of real people's money?
So, Dave, I'm just going to back up a little bit to the mid-year point because that's when I do like super deep dives on the data and come up with a lot of analysis. A lot of water under the bridge between the end of June and now, but I don't know that we've seen a significant reversal of any of the mid-year trends. So we'll go ahead and chat about those. I think we are increasingly seeing the ETF customer kind of split into two. There's the cost-conscious strategic portfolio builder who is still looking for the low-cost, broad-based portfolio building blocks, kind of a set it and forget it, make them efficient in all ways, including investment strategy, and go live your life, go do something else. But we are also seeing more and more a new ETF client who's not particularly cost sensitive and who is looking for a little bit more pizzazz, right? Whether that's piling into active management, I just checked, and it might be this week that we get into 1,000 actively managed equity ETFs. Like if it's not this week, it's going to be next week. And that's something that, Dave, when you and I started working together 10 years ago, there was one, and now it's just insane. There's my chart. Thank you so much.
Yeah, so let's take a look at this. I mean, this is sort of what you're talking about. The big bottom here is vanilla, right? This is all the boring crap, right? That doesn't seem to be changing that much.
No, I mean, it's sort of steadily lost market share a little bit, but it's still sitting right between 60 and 70%. The thing that you see really is that Active Wedge is starting to munch up the market share that used to go to strategic funds, and some people call those smart beta. And the irony is that back in 2014, when strategic funds were like trying to rule the universe, the talk about them was that they had all of the inputs that active managers did, and they used them in the way that active managers did. You just didn't have to pay a crew of people to get out there and implement your strategy. You could automate it and get it up there. And now we're seeing the exact opposite.
So Sumit, Todd, weigh in here. Like, we have seen this wedge of active. I love looking at it on this chart because it sort of looks like that wedge. But we all know that a lot of this is active in name only. Like, is this really a resurgence of active? We got a couple big names out there, but are we going back to the 80s stock picking era, or do you think this is technicalities?
I think it's a combination, right, Dave? I mean, you have things that are active in name only, things like defined outcome ETFs, which I would argue are active in name only. But you also have the stuff that is actually stock picking. We've talked about Tom Lee and Dan Ives launching their ETFs. Kathy Wood is still around. So those things are out there as well, but a lot of it is active in name only. And I'd argue a lot of it is index in name only as well. There's a lot of index funds out there. I mentioned Dan Ives. His ETF is an index-based fund, but the index is based on this AI report that he puts out, which is Totally active. You know, it's hard to say sometimes just looking at whether an ETF is technically labeled index or actively managed. You really have to look under the hood, look at the strategy and see how active it really is. Is it rules based, or does it, use more discretion when it comes to what it's holding?
Need 100% agree with you. I did want to just comment about the chart. I already filtered out all of the defined outcome funds and the ones that were
Gotcha.
clearly 100% rules based, except for an options overlay or something like that. So that wedge
Fair.
is a little more curated than you might imagine. But point taken.
Yeah, and we're
Right.
like at
That you have,
37% flow this year into active, but boy, you really got to be careful of what you mean by that. All right,
you totally do.
Todd, I want to come to you. I'm going to pop one of your charts up here. You cover the flows
Okay.
probably as well or as better than anybody else in this industry, and I love the charts you make. This is your chart. I love this chart. Tell us what's been going on with this. Is year-to-date category flows based on the categories that you're using for this, which I know are sort of your own combo platter. What is the story you're getting out of this?
Yeah, so here's the context. You have a large cap index in the S&P 500 that has been completely overtaken by technology and growth, right? Tech is at 35%. Add in some growth characteristics and you're closer to 40 or 50%. There's no more defensive sectors, right? They're only 19%. So you're losing diversification in the S&P. It has worked out great for passive holders, right? For those just sitting on their hands. But I think there are investors who are saying, all right, how do I surround this? Part of that's going to be performance chasing. And what they're doing is they're buying cash T-bill type ETFs where you're going to get 4% for now. They're chasing gold and then they're buying crypto because it's rare that you get this new asset class on the guardrails of the asset management industry. And so they're adding crypto too. And then a little bit of thematic there, nuclear, power generation.
I mean, it's all AI, right? Whatever bucket it in, it's all AI, right?
Which is a little bit of a problem itself because you already have AI in the S&P, especially at the top. And now you're just kind of adding more AI. But so I think that's where this alts comes into. And I get to do a lot of traveling, and that's what I hear. They're saying, all right, we're buying gold because we want to add something that's non-correlated to equities to some extent. Gold's having a little bit of a week now, finally, right, in the decline. But nonetheless, the year-to-date flows suggest surrounding that tech and growth with something slightly different.
Is there anything else that you've pulled out of that? Because it seems to me that flows have been, I mean, first of all, they're enormous. Like we should put the fact that there's a T on the front end of flows this year, and we still have a couple months to go. And we have seen so much of this going into things that look like cash. It feels like a little bit of a different market. This doesn't feel like the same big flows years we've had in the past where it's been an obvious, US equities are taking off or international equities rotating in. This feels like new money just parking in ETFs, like whether it's Bitcoin or gold or cash. Those are all parking places for a lot of money.
Right.
Am I wrong about that?
You haven't had 4 to 5% rates in a long time, right? QE, financial repression, whatever you want to call it, you had nothing. You had to go to staples and utilities. That's completely changed over the last 3 years. So that has made Treasury bill ETFs and CLOs, right? CLOs are quite popular right now. Credit is part of that. And it's easy to buy it in ETF. It's largely efficient, lower cost, I guess, to some extent. And then now you have crypto, right? There was a fair amount of people who were reluctant to buy crypto because they would forget the password, they lose the wallet, right? I'm part of that myself. I didn't understand how it worked, but now I can buy an ETF, I get the exposure, and I don't have to worry about things.
Convenience trade. Sumit, got any thoughts here?
I mean, I love this chart, Todd. Did we mention, by the way, that we recently hit 1 trillion in inflows for the year? Or at least I know
we did.
Bloomberg
We did.
data.
It's got a
we
big
did?
T in
Okay,
front of it. Yeah.
Incredible. Yeah, so I mean, this is a great chart showing that like the ETFs are essentially the market now. They're not just one thing. Even though we are seeing VU with a second straight year of $100 billion of inflows, that money is being dispersed across a wide range of asset classes. I think what's interesting to me when I look at the data is not necessarily the inflows, those are interesting, but the outflows as well. If you look at some of the top outflows, you're seeing small cap ETFs have their worst year on record when it comes to outflows. You're seeing something like RSP seeing $4 billion of outflows. That's the equal weighted S&P 500 ETF. And I recently wrote an article about how OEF, which is the S&P 100 ETF, is having its best year ever. Assets under management have doubled to $30 billion. So they're like a mishmash of, ETFs I just listed there, but it all kind of is based on this same idea that people are kind of throwing in the towel on the idea that smaller stocks might start to outperform, because for the past 3-4 years, everyone was talking about concentration risk. You got to kind of reduce that, buy RSP, buy small caps. But we've seen a bit of a throwing in the towel on that trade. And it's incredible. I mean, it continues to work. The large caps continue to outperform. So people are gravitating towards something like VOO, even over something like VTI, which is Vanguard's total stock market ETF. That's had a pretty good year, $30 billion of inflows. But even implicitly, when you buy VOO over VTI, you're making a bet that large caps are going to outperform small caps on the margin. So we're seeing it across the board. People are just favoring mega companies this year.
Yeah. Kind of an oligarchy trade in a way. And we've seen this, like that split between RSP and OEF, the 100 and the equal weighted. There's a Financial Analyst Journal article coming out talking about that as kind of the new way of thinking about dispersion and outperformance of the mega caps. And it does seem to be getting worse and worse. And it seems to be showing up in the flows numbers too. Yeah. Despite, a couple moments where we thought we were actually going to get a small cap rally. All right, let's move on. We were going to have James Seyfert here to talk about staking and Solana ETFs and so on. The big news here is simply that the floodgates are open and we're going to have a ton of these things launching once we finally get the government reopened. Anybody have any hot thoughts on this flood of new crypto products? Are these really going to service any investors? Are any of these going to get any money?
Listen, I have no idea what Polygon and Cosmos and Sui?
If you can't pronounce it, you shouldn't trade it. Seems like a good bet.
I do. This is where I need James, because James walks me through what these actually do. Gosh, I don't know. I'm a little skeptical. I think most people defer to Bitcoin because that's what they know, and a little bit of Ethereum. So, but I do think it was interesting. Rowe Price filed for a crypto ETF today. So this is real. This is not fringe anymore.
Well, and we should point out what that is, because they didn't just file for a crypto ETF. They filed for a crypto coin basket ETF that's going to be actively managed. So you're not only wading into the crypto industry like, hey, look at us, guys, we're showing up. You're saying, and we know more about it than everybody else, so we're going to actively manage it.
Including Sui.
Including SWI or whatever, but we still don't have an index fund that does this, right? I mean, BITW, I think, is the one that's queued up most aggressively to become the first crypto index fund that's actually holding multiple coins. I suspect that will be successful. Sumit, you've been watching this for a whole long time.
Yeah,
Do you think any of these are going to get traction?
I mean, it's an open question, right? We did see Grayscale, I think, come out and they launched an ETF that has, or they added crypto tokens to an existing ETF, and it has 5 tokens in there right now. So we're starting to see the era of the crypto index fund. It's an open question, though, whether investors are going to gravitate towards that over what up until now has been these single crypto ETFs, which are dominating. Obviously, the Bitcoin ones and Ethereum ones have taken off this year. So I'm going to be really curious to see, are investors going to give these a chance or not? Or are they just going to stick with the ones they know, like Bitcoin or Ethereum? And I think that's a big topic, but we started this off by saying, this whole staking thing, that's very important as well. Ethereum ETFs offering staking for the first time. And I got to chat with Grayscale's Krista Lynch the other day. They were the first Ethereum ETF to offer staking. And it's really interesting. One of the ideas we were talking about is, crypto ETFs, spot crypto ETFs, they're all kind of the same. There's a little bit of competition when it comes to the expense ratio, but once you introduce staking, there's a whole new dimension of competition that opens up when it comes to these ETFs, because each ETF is going to stake a different amount of their holdings depending on what they're comfortable with. You go to Grayscale's website for their mini trust, ETH, and they've staked around 65% of the Ether in that fund. That's what they're comfortable with right now. You could see other Ether ETFs in the future maybe stake 80% and the yields are a little bit higher. Maybe it's riskier, in terms of liquidity and redemption and things like that. But we'll see what happens with that as well. It's interesting.
Elisabeth, bring us back to reality here. You spend a little bit more time talking to sort of significant advisors and institutions who are actually managing real portfolios. Is this just a weird corner of the crypto market that only degens and the occasional advisor care about? Or are you starting to see some demand for at least intel and information and data around this part of the business?
So, good question. I would say the data requests for the lesser known currencies, cryptocurrencies, haven't really filtered their way into the funds world so much. However, just kind of going back to what we're seeing about who's playing in the ETF space and why, people are buying all kinds of crazy ass products.
People will buy anything.
Well, it used to be like, just a couple of years ago, I wrote this long article called Thinking About Entering the ETF Business, Think Twice, because the ETF closure rate and the ETF not closed but limping along rate is really significantly high. And it's not that that has changed, right? We're on track for closures of like between 5 and 6% of the count that we had at the beginning of the year. It's pretty normal. And our launches have exploded. We'll probably get to 1,000 launches before the end of the year. And a large percentage of those are going to languish with a couple million in AUM until somebody decides to put it out of its misery. But we're also seeing a ton of niche products that 3 or 4 years ago we would have laughed and said, no one's going to buy this. And now people are buying it.
And that is $1 billion in it. Yeah.
Yeah. I mean, and that sort of goes back also to talking about flows. Like, honestly, the top categories of what people are buying in flows this year are as boring as ever. Like a quarter of that $1 trillion went into US large cap and another 6-7% went into US total market. And, you've got all of the segments that you think of. It's just that there's some surprises slipping in there, like Bitcoin that didn't even exist in the market, the ETF market a couple of years ago is in the number 9 slot.
Right. Well, okay. So the short answer is everything's going to be successful because people will buy anything. Okay. I have three news items. Three news items I want to hit really quickly. I just want your opinion about whether these are going to go thumbs up or thumbs down. First one has got to be one of my favorite things of this entire year, and that has been this. Invesco desperately trying to get people to vote the proxy. And I don't know why I find this so entertaining, but if you haven't been following the news, gentle reader, Invesco is calling everybody who has ever touched a share of QQQ and is trying to get them to at least show up and be counted for their proxy vote to change the way it's working. The long story short is it'll save investors 2 basis points, and it will generally give more of the money that is collected to Invesco. And lo and behold, this chart, which I love from the Financial Times, the day they announced they were going to do this, Invesco's share price went through the roof. So now they're desperate to actually make this happen. I would swear I've had at least 50 phone calls from Invesco trying to get me to say yes to their proxy vote. And I'm not saying no, but I'm just curious how long this is going to go. Over under, who thinks that they will be successful at actually getting this proxy vote done? Hands up if you think they'll be successful. Oh my God, none of us.
0 for 4.
That's crazy. So that to me, that's an interesting and somewhat profound comment on the ETF structure. If you get too successful, you are locked in, because if you can't get a proxy vote done, they can't change anything about this. Does anybody think this actually matters? Okay, tell me, Elisabeth, why do you think this actually matters?
So I think it would be an amazing change if Invesco can pull it off, right? The unit investment trust structure dates back to the 90s. SPY is still holding it, DIA, MDW, but it's really not the best ETF structure. And the specific terms for QQQ, where there's most of the expense ratio winds up going into marketing the product. It's kind of a Ponzi scheme, right? The more marketing, the more assets, the more marketing. Like, you see how it goes. It's really good for that little cycle, but it's not really good for actual clients, right? It would be much better to be able to cut the expense ratio. For Invesco, obviously, it would be much better to actually be able to capture some of the revenue from really like what is their only flagship product, right? They've got the bullet shares suite, which is solid, but QQQ is most of their AUM and they're not able to access it, right? They did launch QQQM to sort of slowly capture some of the assets that might otherwise go into QQQ. I think really it's a question of investor inertia and how very noisy it is out there and how very difficult it is to mount a proxy vote. What does your junk inbox look like?
Yeah, and my take is that I think they've spent, by reporting, they've spent about $40 million so far on the effort to get people to respond to this. That was reported, I think, by the FT. There's got to be a number. Somebody in some conference room is saying, look, when we hit $50 million on outbound telemarketing expenses, we're just cutting the cord on this and we're not going to try anymore. But now it's sort of like this game where I'm dying to see, like, are we going to be a year and a half from now and they're still going to be like sending couriers to people's houses and knocking on doors like Jehovah's Witnesses saying, could we please get you to register your Q shares for this vote? That's what it feels like. Okay, but none of us think it's going to pass, which I think is hilarious. Second one, we've got 3x and 5x levered ETFs now filed underneath this little shutdown window. Does anybody think we're going to get a trading 5x ETF? Hand up. Again. Oh, Elizabeth thinks maybe. You think it's going to slide in?
We're in such uncharted territory right now in terms of the functions of the executive branch. And there just don't seem to be a lot of incentives on either side of the aisle to close out this shutdown. And then before you know it, it's Thanksgiving. And then before you know it, it's Christmas and New Year's. Some of the other holidays that might be changing their names again. Who knows?
So you think it could just slide through? Todd, you look skeptical at that.
Well, tell me, will the government be open or closed? And I'll have a better edge.
Let's assume that the 75-day clock from the 5x filings, which was earlier this week, I think last week.
Yeah, last week.
I think it was Monday, maybe. So like that puts us basically at the end of the year. Let's just pretend that that's the true answer. Do you think? I mean, I think we're probably open by the end of the year. So I'm going to say yes. In a scenario where we're lived our way back open.
You could talk me into 3x, 5. Oh man, I mean, you're just saying screw it. Private assets, everything, get in. Come on down the road here. We're open for business.
But you're skeptical. You think they'll step on it?
Yeah, I mean, a day like today, I don't know what the end results were, but there would be some 5x type products that would be zeros, depending on the underlying. I'm thinking of like high beta quantum type stuff. Those would go straight to zero on a day or a week like this.
Just today, one of those hot, retail stocks, closed down 20%.
Yeah. So I'm very skeptical.
Sumit,
I don't get it.
I have no idea, but I'm kind of curious to see what would happen if it did come to pass. And I have an idea we can make like an ETF obituary section for the website because so many of these, like Todd said, are just going to go to zero on a crazy volatile day.
Yeah, I think it was Balchunas did the 3-year look back if these things had existed over the last 3 years, and there'd be 320 closure events or something like that. Yeah. All right, so that's that. And then last one, ETF share class is basically approved. Do you think that we actually get an ETF share class trading by the end of the year? Yes. Elizabeth thinks yes.
I do.
Todd thinks yes too. Okay.
Yeah, it seemed the DFA did a share class filing. I don't know what day that was. That was in the last 2 weeks.
Yeah, maybe? 2 weeks ago. Yeah.
So they seem very intent on getting that out ASAP. Within 60 days, whatever the timing was on that. So you're cutting it close, but it seems that seems to be their goal.
And how many, I agree, I think it's happening. Does anybody have an over-under on how many actual new tickers we might get by the end of the year? There's 4,600 funds theoretically covered, but in the groups that have filed. Obviously, a fraction of those will actually get turned into share classes. Anybody got an over-under?
It's not clear to me that anybody else was ready to go on day one in the way that Dimensional has been. Dimensional was really positioned themselves as a leader in this effort. It seems like they've done their homework, not just on the regulatory side, but also on the operational side. If you're listening to ICI, they're just kind of getting out there now with webinars about these are all the complications and these are all of the things that you're going to have to do, and these are the concerns that you're going to have, and this is the board liability that's going to be out there, right? And so it seems like everybody else is kind of waiting to see how this thing's going to work.
And then they'll limp through.
Yeah, so if I had to handicap it, I would say dimensional gets out in calendar 25, and that's it.
Okay, fair enough. All right, well, look, we hit 6 big stories in 30 minutes. That's all I wanted to get done. Thank you, all 3 of you, for joining us. I hope you'll join us again in a couple weeks. We'll hit this one more time. We'll see what the ETF industry cooks up for us next time. Thanks.